Investors are not in good hands on Allstate. The insurance company just pre-announcing third quarter results. Shares plunging down 8%. Let's find out what's going on. Contessa Brewer covers insurance for us as well and joins us now. Contessa, what is going on at Allstate?
Yeah, they just dropped these results on us. It looks like we're looking at an adjusted net loss here of as much as $450 million. Let's really focus in here, Brian, on catastrophe losses expected to be $763 million for the quarter, and that's after reinsurance kicks in. If you're looking at Ian alone, look, in Florida, Allstate only has 2.6% of market share for these personal property insurance policies in Florida. So 25% of what they saw coming in from Ian was related to property lines and 75% in auto coverage. And what they've said is that the inflation related to both of these is significantly adding to their costs. We know that house values have skyrocketed in Florida. And so if you're paying someone to replace the loss of their home, the costs are significantly going to increase. Not only that, they're looking at bodily injury costs where it comes to auto insurance increasing as well because of medical inflation. So there you're getting it. They say that the estimated catastrophe losses for just the month of September when Ian happened, $440 million. They are expecting to have some reinsurance kick in for those policies as well. But a tough quarter for Allstate here, and the shares right now in extended trading reflecting that.
Contessa, it's a little bit surprising, given to your point that you just made. They're only, what, you said 2.6% of policies?
Yeah, but the damage, remember, you're looking at now as much as insured losses from Ian, as much as $70 billion. And we just heard from Travelers today, which had about a $500 million in catastrophe losses this quarter as well. And the CEO of Travelers was very clear that the morass that is the insurance market in Florida is now threatened in other states as well. He says, look, skyrocketing litigation. I just reiterate again that it accounts for Florida accounts for 9% of the property claims, but almost 80% of the lawsuits nationwide. There is skyrocketing fraud, and what they've seen is that the regulators are keeping premiums artificially low. It makes it very difficult for insurers to operate in Florida, and that's likely to spread elsewhere.
Contessa Brewer on Allstate, a negative pre-announcement. I will say the stock is still higher year to date, at least going into now.
Well, it should be. Great reporting by Contessa, because she's outlining the cross currents for the sector here. You have a case where there's some great tailwinds right now for insurance. First of all, it should be conservative. It should be recession resilient, if not recession proof. It should be a case where rising rates actually help their investments. The flip side of that is not only Ian and reinsurance costs and rising fraud, or at least insurance claims, but also even alternative investment losses. We're hearing what's going on with UK pension funds. Insurers here are running into some dynamics. Again, the volatility that are in bond markets and that are in some of these AAA return profiles that they are investing in are things that you have to worry about. So I don't think you run too far, and I think these kinds of pullbacks are ones that are worth taking a look at. They've dealt with the Ians before. I just think that the dynamics around pricing power and reinsurance are things that are more unique to these times right now.
I mean, one thing about Allstate is if you look at it relative to its group, right, the other property casualty like Chubb and Travelers and Progressive, it has been a chronic underperformer. So I just think this is yet more reason not to have this one, certainly if you're in the pairs business.